Inflation rates are falling around the world and are expected to continue to fall this year. What does it mean for investors? So the US posted an inflation rate of 6.5% recently, which is a big fall compared to the 10% we saw, or close to 10% we saw just a few months ago. And I'm going to talk about that on today's video alongside the picture globally for inflation. Before doing that, go over to adamfire.com, especially if you're an expat or a high net wealth individual, and see how I can help you. Now, as mentioned, the US inflation rate has gone down quite substantially in the last few months. And what's interesting is, I'm not an economist, and I think you should always take economist predictions with a pinch of salt. But some of the best analysis I've read in recent weeks has basically said that for US inflation in particular to fall to about 3.5% by the end of the year is pretty much baked into the data. And there's numerous reasons for that. But one reason is inflation falling doesn't mean falling prices, of course, because let's say if you've got a house, which is, let's say 500,000, and then the average house goes up to 600,000, that's a 20% increase, right? But then from 600,000, it goes up to 612,000. That's a 2% increase, right? But obviously the price is not going down, it's just going up less fast. And I think that's what we're seeing with inflation. And one of the reasons inflation almost for sure is going to go down is the baseline is comparing to last year. So if you think back to last year, inflation actually peaked in many cases in the middle of the year. So for example, the price of filling up at the pump in many countries, it hit a record in June or July, and then it fell from that point onwards. So even though the price of the pump now is still higher than this time last year in many countries, once June comes, July, August, September, and so on, if prices keep moderating, it's likely that the price will be lower than this time last year, if that makes sense. Same with something like housing. So UK and US for that matter, house price inflation was up more than 10% year on year. But then a few months ago, prices started to fall in the UK. So by June or July or August, it's likely that year on year house price inflation will actually be negative because you're comparing it to June last year. So that's one of the biggest reasons I think inflation will fall. It's because if you look at what happened last year, prices went up very fast in some cases, but then even by the end of last year started to fall. So if we're comparing year on year, it's just a statistical reality. The prices don't keep rising. The inflation rate is going to fall. It's not the same thing as deflation. Now, I think a wider point, though, is how much are the central banks going to keep to a 2% strict target? Because I think to get inflation down to that 3.5% is very likely, but are the central banks going to keep pushing to get inflation down to 2%? I think it would be a mistake. I know a lot of people, Elon Musk and others, think it's a huge mistake what the central banks are doing because we're going into a slowdown in many advanced economies at least. But we'll have to wait and see what happens there. Having said that, I do think inflation might be a bit more sticky in some countries, like in the UK and beyond. It wouldn't be surprising if UK inflation was still 4 or 5%, for example, and maybe in some emerging markets that are in crisis in some cases, like Pakistan and beyond, it will be higher still. But what this really shows for investors is, first of all, runaway inflation is not going to happen, right? Some people are worried that what happened last year will become a permanent thing. We'll go back to the 70s and 80s. Double-digit inflation every single year. So we'd have 10% last year, 10% this year, 10% next year, blah, blah, blah. So double-digit inflation would be the new norm. We're going into a year, really, where, many countries might go into recession. And even though many countries won't go into recession, in fact, some economies around the world are booming, nevertheless, it's very unlikely that inflation is going to accelerate unless there's something like an unexpected war in the Middle East or beyond. Inflation rates are going to fall, and even next year in 2024, it's very unlikely we're going to see double-digit inflation in most advanced economies. So this worry about runaway inflation, it was never likely, and it's even less likely now. That's number one. But number two, I think, if the central banks decrease interest rates or keep them stable, it's likely that some riskier assets like technology and so on will actually do quite well. So far this year, if you look at the global stock markets, non-US stock markets have outperformed, but when it comes to US stock markets, the Nasdaq has gone up more than 10%. I made this video towards the end of January, and yeah, it was about 11 or 12% when I looked at it in the first month of the year. And one of the reasons for that is investors are speculating that basically, obviously, if the Federal Reserve pivots, or even if they don't pivot, but they just don't increase interest rates, that will be good for growth stocks and technology and so on. But assets in general are reacting very well to these speculations. Having said that, the last point I would make is, as per my last point, it is a speculation. Ultimately, this time last year, I don't think many people saw what would happen coming with Russia and Ukraine and so on. You never know. There could be an unexpected event like another war or whatever. So investors just need to play the long game. It is likely, and it looks like it's very likely, that stock and bond market performance this year will be much better than last year, but we never know for sure. I think real estate will be a very interesting one this year because real estate has lagged the stock and bond market. So last year, if you remember right, real estate was still booming until about the middle of last year, or even until August, September of last year. But then now in many countries in the world, like the UK, Hong Kong, South Korea and beyond, prices are actually falling. They're not just stagnating, they're actually falling. So I do expect that real estate will probably stabilize in many countries. I think a 2008 situation where you've got 20, 30, 40% falls in some countries is unlikely, but another 5 or 10% might be quite likely. So when it comes to real estate investment trusts and even direct real estate, I'm not as pessimistic or optimistic, should I say, in the next 6 months. I think it's going to be quite tough. But I think for stocks and bonds, again, no one can know for sure, but I do think it's likely that by the end of the year, most indexes are going to be up, unlike last year. But we'll have to wait and see, right? Obviously, there's so many unknown variables. But my own sense is the inflation situation is coming under control, at least in most developed countries. And we're going to continue to see a deceleration of inflation as the year comes to a head, basically, by the end of December.
Depends on every person's individual goals, how much money they want to invest, how long they want to invest. And I did not have at all the feeling from any bank with which I had contact with that they were interested in these things. Mm-hmm. Whereas with you, it was from the very beginning obvious to me that you had experience in these matters and also were interested in what I wanted to achieve.
Anyways, I'm very, very pleased and positive to say that I believe I've picked the right one. The results in the last couple of years have overreached my expectations by far. And I see no reason why it should not continue. Of course, I can highly recommend him as your financial advisor for now and for the future, because hesitating is missing out.
So I'm investing a lot in the Middle East market, but the amount of returns I'm getting from there is very low as per the amount of returns I'm getting from the investment portfolio which you made for me. Obviously, the best result in market right now is Adam.